Hi, and welcome to this month's vlog. If you've been following us, you'll know that this month we're talking about income taxes. Always exciting to talk about. It's really important to understand your tax return, and I say this every year, but you need to actually take a look at it and see what it tells you. Something I get a lot of questions on is regarding what is income? What am I taxed on? What are the type of things that count for this? So I want to talk about those different categories. The first category is earned income. This is the most intuitive to most of us and what most people think about when we think about our income taxes and our income. This is money that you're bringing in or earning for work that you did. Typically, you receive a W-2 for this type of work. You also have earned income if you run a business or a farm. This is considered self-employment income, and you actually have an additional self-employment tax that you'll pay too. The next area is investment income. This is income that's coming from your investments, and it comes in the form of interest, dividends, and capital gains. Long-term capital gains are taxed at a lower preferred tax rate, so we really like those. You might not see this happening. It might be happening in the background of your investment accounts, but it's there, and you'll receive a tax statement at the end of the year. The next category would be sources of retirement income. So there's lots of different types of retirement accounts out there. If you take a distribution from an account, you're going to be taxed on the total distribution. This is reported on a Form 1099-R. If you're under age 59 and a half, you might also be subject to an additional 10% penalty on top of your ordinary income tax, unless you meet an exception. The one difference to this would be if you took money out of your Roth IRA. In the case of a Roth IRA, if you've met the holding requirements, you are not taxed on any of your distribution. And if you don't meet the withholding requirements, you're only taxed on the gains on that account. Another source of income is Social Security income. Some people think that Social Security is not taxable, but it is. And it goes through a formula to determine how much is going to be taxable. It could be as low as 0% and as high as 85% of what you earn will be taxable. Then we have all of the other categories. This includes things like unemployment, gambling winnings, prizes and awards. Sometimes bonuses are paid this way. If you have a debt canceled, it would be taxable this way. Jury duty and some types of alimony. And this category really encompasses just any other sources of income. Now, our tax code is really complex, so if you ever have something you're not sure about, you don't know how it counts or how it affects you, we always recommend reaching out to your tax professional to ask those questions. I hope this little video was helpful to you to help you understand what types of sources of income are going to be taxable to you and how they might affect your tax return.